Hello and welcome to today's video. I hope you are doing great. The Union Budget 2023 proposed a tax collection at source (TCS) for outward foreign remittances under LRS of 20% applicable from July 1, 2023, other than for education and medical purpose. This will come into effect after bill is passed. The TCS for 5% is currently applicable for outward foreign remittances above INR 7 lakhs. In today's video, we will understand TCS and how new proposal will affect you with examples. So, what is TCS? Tax collected at source or TCS is an income tax collected by the seller of specified good from buyer. TCS is a concept where a person selling the specific item is liable to collect tax from buyer at prescribed rate and deposit the same with the government. Under the LRS Liberalised Remittance Scheme, the bank must collect 5% of the aggregate remittance amount exceeding 7 lakh during the financial year before the budget 2023. It is important to note that the TCS only applies to outward foreign remittances when Indian rupee gets converted into foreign currency and sent outside India. It doesn't apply to foreign inward remittances in which money is sent to India. So, what would change after this new proposal on TCS and how would it impact you? This will be applicable from July 1, 2023. The TCS rate will increase to 20% from previously applicable 5%. For foreign remittances for other purposes under LRS and the purchase of overseas tour packages, the threshold limit of 7 lakh is also removed. Let's see this with an example. If you send INR to any other currency for investment in listed equities, overseas tour packages or other purposes, the bank will require to collect TCS at 20% on that amount. Like if you remit 10 lakh to the US dollars, the bank would deduct TCS of 20% on that 10 lakh. That would amount to 2 lakh rupees. But for overseas education and medical treatment, a TCS of 5% will be applicable for an aggregate amount in excess of 7 lakh being remitted during the financial year. That remains unchanged. It is important to note that TCS deducted by the banks can be adjusted against the tax payable while filing income tax return and claimed as an income tax refund or a credit. For example, if you remit 4 lakh and rupees 80,000 was deducted as TCS, and while filing the ITR return, the overall tax liability is 2 lakh rupees, then you have to pay 1 lakh 20,000 only after adjusting already paid 80,000. And suppose in the cases where TCS amount is less than your total tax liability, then you will receive the extra amount as refund. But this could add as a friction factor for most of the small investors, and they would have to take a hit of 20% upfront before investing in US market. Although they can adjust it in ITR, most people will feel it as an extra step and might avoid investing in US. That's all for this video. Please consider subscribing to the channel if you found this helpful. If you have any feedback on this video, you can provide it in comment section. See you next time. Nikhil Raman signing off.